So what are the things that I want to make sure when I start my day, when I start trading a new session, or I come back to the markets after any prolonged period of time away. So let's say, for example, in the morning, I'm going to start off with a look at the Forex market pulse, and I'm going to keep an eye on it throughout the hours that I'm trading. Let's say I go ahead and take midday off, as I typically do after London closes, after Frankfurt closes. So basically, between 11 and say 12:30, I'm basically winding down for my, say, morning session for my day typically. If I do want to come back and trade the Asian session about 6 p.m. my time, and I live on the East Coast, so it's New York time. So if I want to come back and trade Asia, I'll again check this Forex market pulse again. Now, one thing I do want to say, as far as that rhythm of the day goes, let me show you the rationale behind that. So here's the power stats, and this is what I'm going to use to again, the rationale behind that trading days, coming and going, the rhythm, if you will. So depending upon the pair, now this is the CAD yen, I don't need to look at that. Let's pull up the Euro US dollar. And then what I'm going to do is scroll down to the view analysis. I just want to show you the rhythm. I know a lot of you have seen this. I know a lot of you have not. So what this is, based upon a Eastern Standard Time clock. So 0 would be midnight, 2300 would be 11 p.m. So it's a 24-hour clock. And what you're looking at is a graph of the trading day, where we have a high to low range that represents about, I believe, 70% of the typical movement. And actually, this is the Swissy. How did I get there? All right, I want to look. Well, Swissy's fine. I'll look at the euro here in a moment. So if I have the trading day in my head, and I have the financial centers that I know are going to be in play, in terms of the way I organize my day, this is so important, because it's just impossible to be in front of the computer all day long, and frankly, neither do I want to be. So in terms of when I'm going to come and go and deal with the Forex market, one of the things that was so difficult for me is coming from a stock and futures background. I dealt with real trading hours, I dealt with an open and a close, and pretty much after hours, even as they are now, are just really not all that liquid. But there are no really after hours in Forex. I mean, it really is truly open and liquid all day long. And while the liquidity comes and goes, it's such a huge market, even to call any particular financial center illiquid would be kind of ridiculous. But there are times when there is more volatility, and this is what we're talking about here. So this is 5 pips to 60 pips, and that's this vertical axis. Again, this time axis is a 24-hour clock based upon Eastern Standard Time, and you'll see the first pickup in volatility accompanies the 2 and 3 a.m. bar, which is Frankfurt and Paris at 2 a.m. and London at 3. Now notice a drop-off at 4. What happens at 4 a.m. Eastern Standard Time? Basically, Asia closes up for the day. So you have Frankfurt and Paris, then London coming to the party, you have Asia leaving the party, and then there's this lull here, 6, 7 o'clock, actually 5, 6, 7 o'clock Eastern Standard Time. We pick up again at 8, 9, and 10. Now why is this pickup again? Who's coming to the party at 8, 9, and 10? Futures markets are opening, at least indices are opening in the U.S. 8:30 economic reports out of the U.S. During that 9 o'clock hour, 9 to 10, 9:30, the equities markets open. The bell rings on Wall Street. 10 o'clock, we have another set of reports that often come out. But then take a look at the drop-off. Now this is the Swissy. You'll see a very similar rhythm on the Euro US dollar as well. But look at the drop-off. What happens after 10? We peak in terms of volatility usually, because That's the last of our scheduled data releases, if we're going to have them. Now remember, this is a look back of about 6 months, I believe. So this is averages in all those economic reports, and it just gives you an average of the way a typical day will behave. But notice the range. It's huge, right? That high to low range is significant. Why is that? Why would we be sometimes up near the top of this range and other times near the bottom of this range? Well, what's going to dictate where we are along this range is going to have to do with the economic reports and the potential for volatility on any given day. So being up in this area versus being down in this area is going to have a lot to do with, is there an economic report this day? Is there not? Because we're likely to trade on the lower half on days that we really don't have a lot of economic data versus the higher part of the range. And then you can see the average. That's the band across each one of these bars. So when I look at this and I consider this 8 a.m. Here we go. When I consider this 8 a.m. as the beginning of the U.S. session, when I consider 2, Frankfurt and Paris, London, Asian session for me, when I start coming back at about 6 o'clock, again, Eastern Standard Time. Equities markets, here they are. They close at 4 p.m. But what I want you to notice is the steady drop, and then how it just kind of really is much less volatile during the Asian session as compared to the overlap between Europe and the U.S. So there's that pickup going into Europe. There's that drop down after Asia. There's waiting for the U.S. session. And then there's that pickup when the U.S. session begins once again. So when you realize and understand the rhythm of how the different financial centers come in and leave for their particular trading day, when you consider the overlaps, the rhythm of the market makes perfect sense. So, I don't want you thinking that the way I schedule my trading day is somehow haphazard. It really isn't. The way I've scheduled my life is really around that rhythm. We'll take a look at the Euro US dollar here real quick. Let's see. So here's the rhythm of the Euro US dollar, and then we'll get back to the Forex market pulse. So movement per hour, 24-hour day. Very similar, right? That ramp up into London, or I should say Paris, Frankfurt, London. Ramp up into that. The drop as Asia leaves, waiting for the U.S. The pickup with the U.S. U.S. starts to drop in volatility because we're done with our typically scheduled economic reports. Frankfurt leaves the party basically around 11 a.m. Eastern Standard Time. London's winding down around noon. Look at the drop-off. We're also going into lunchtime on the East Coast. Really get kind of flat lines until what? Equities markets in the U.S. close. And then we have Asia. And again, look at the difference in volatility between, for example, and let's highlight two. This is a common mistake that a lot of newer traders make, whereby they look at, for example, they look at the 8 o'clock hour, a.m., and then they look at, say, for example, 8 p.m. Okay, look at the difference in these two 8 o'clocks, 8 a.m. and 8 p.m. You can't look at a chart. You can't look at the trading day and say, I'm going to see the same kind of volatility at 8 a.m. as I am at 8 p.m. It's a completely different host of factors and characters, if you will, in terms of who it is we're dealing with. Who it is we're dealing with in terms of a completely different plot line, right? Different financial centers offer different types of volatility. In Asia, generally speaking, is much more sedate than that overlap between Europe and the U.S. So, does anyone have any questions on how